I will first initiate a few questions that are originally focused in the MENA region, challenges and opportunities regarding sovereign wealth funds in the MENA region, so that perhaps later on we can simply jump onto more specific questions and definitively the advice that we can receive from Dr. Robert, considering maybe the strengths or the strategies that should be implemented at the level of the United Arab Emirates in order to better assess what are the challenges and opportunities facing the sovereign wealth fund in the MENA region. But before anything, and on behalf of the Center for the Study of the Global Economic Future and me as a member of the American University in the Emirates, I will appreciate if Dr. Robert can let us know a little bit about his book that he's writing precisely on this topic, so that we can jump on immediately on with the questions. Thank you very much, Dr. Robert. The floor is yours.
Thank you very much. It's a pleasure to be with all of you, and I really appreciate the very generous invite for me to come and speak with you all. I would like to first say that the book is it's a very interesting project, but it is still a work in progress. It's also an edited volume, so I can't take full credit for the work. I'm relying on a number of really leading scholars and close colleagues to help support that project and contribute some really interesting and diverse chapters. So hopefully we will wrap up this project throughout the course of this year, and it will come to a bookshelf, either a real or virtual bookshelf to you very soon in the next year. But to just give a little bit more of a flavor about the book project, it is actually about the political economy of sovereign wealth funds in the Middle East and Asia, with the idea being that if you take any ranking of the world's largest sovereign wealth funds, and you look at the first 10 or 15, the majority of those sovereign wealth funds are actually going to be based in the Middle East or in Asian countries. And I took a look around at the other literature in this broader domain and found that there were very few, if any, studies that looked specifically at the subject of intersectionality between sovereign wealth in these two very important regions of the world. And that really was the genesis behind the project. And then I brought on a number of as I said, close and very smart colleagues of mine to look at this subject from various different angles. Some of the scholars are coming at it from a Asian studies background, really looking at Middle East sovereign wealth from the perspective of Asia. And then a number of colleagues, of which I would really fall into this category, are also looking at the intersectionality equation from the Middle East side of things. So that's really, in a nutshell, where this book project is right now. And like I said, it's a very exciting work in progress.
Thank you very much, Dr. Robert. So then start with the first question. According to your own experience and research that you are conducting, that you have been conducting on state-owned investment vehicles, such as a sovereign wealth fund, how do you think the regional balance of power, the different shifts that are taking place and international upcoming political dynamics will shape and will play a role in the MENA-based sovereign wealth fund strategic outlook in the coming future?
Sure. So to my mind, we live in a very volatile world. And I don't think it's very hard to look back in the last few months, in the last couple of years, and point to a number of events that have happened both within the Middle East region and kind of on the international stage that have really created this sense of extreme volatility that then has rippled into financial markets and into the various domains within which sovereign wealth funds operate. Volatility, it creates risks, but it also creates opportunities too. And this is where this is really the challenge of confronting officials who are in charge of managing sovereign wealth for their particular countries. How do they manage the volatility both within the region and also internationally speaking, and try to push that sovereign wealth in a direction in their investment decisions in a way, in a direction where they're taking advantage of opportunities and not putting out fires associated with all of the risks that come with that volatility. So that's my short introduction to the question, so to speak. What you asked really has two different components. You asked about the regional dimension and then the international dimension. So I'll try to just tackle both of those very quickly. I think on the regional side of things, we're of course speaking about the Middle East, and I will actually narrow it down even further to speak mainly about Gulf sovereign wealth funds, because these are the largest sovereign wealth funds in the region. These are the most consequential. These are the ones throwing around hundreds of billions of dollars, within their economies, within the Middle East region and beyond, in other markets, as we heard in the introductory remarks, and that's quite accurate. And to my mind, we're going to see sovereign wealth funds playing an increasingly important role as essentially as drivers of development within individual economies. And specifically, I would point toward Saudi Arabia and the UAE. These are the two biggest economies in the GCC, and both have pretty consequential and highly visible sovereign wealth funds, but there are important differences between the two. And I would preface my remarks with the fact that over the past couple of years, scholars like myself and many of my colleagues have started to notice, an increasingly overlapping development trajectories between a number of GCC countries, but in particular between Saudi Arabia and the UAE. And I would not go so far as to say that, they are, bitterly at odds against each other and, fierce economic rivals. But there certainly is a strong degree of regional competition between the two countries. And sovereign wealth funds, as we have witnessed, those of us who are looking at these kind of overlapping development trends and the potential for economic friction and increasing competition, are starting to see sovereign wealth funds really playing an important role in those trajectories. On the one hand, you have a country like Saudi Arabia, who's really trying to modernize its economy very, very quickly, feels that there's a lot of ground to make up with respect to some of its other neighboring countries like the UAE. And Saudi officials are very keen to use their sovereign wealth fund, the Public Investment Fund, in a very, what I would say, a very aggressive and very ambitious way to promote domestic development. There's some of that Saudi sovereign wealth is spilling over into the broader region with investment hubs in Oman and Bahrain, of course. But a big focus of the investment activities is actually on the ground in Saudi Arabia. The UAE is, of course, doing this as well, but the UAE doesn't have all of its eggs in one sovereign wealth basket. There are a number of sovereign wealth funds in the UAE. Just in Abu Dhabi, you have ADQ, you have Mubadala, and you have ADIA. And all of these sovereign wealth funds have oversee different investment, sizes of investment capital. And that enables some of the funds to play a little bit more conservative role to, safeguard wealth for future generations, whereas other ones with, still a sizable amount of investment capital, maybe $300 billion or so to invest, they can be a little bit more experimental. So I guess I would say on the regional level, there's a lot we could talk about, and we probably will later on in today's discussion. But I do see sovereign wealth funds, especially the key players I mentioned, the Public Investment Fund, ADIA, ADQ, and Mubadala, really playing a key role in the economic trajectories of the region's two largest economies. I think when you look beyond the region and you look at the international political economy dynamics, really the big risk for sovereign wealth funds is, where are they exposed? I mean, where are the vulnerabilities for their investments? And we know in the past, the traditional safe conservative approach to investing sovereign wealth was, we want to diversify away from oil and gas. So we're going to take these earnings that we have from energy exports, and we're going to invest them in, get a safe return, safe single-digit guaranteed return by investments in primarily in the U.S. and in Europe. I think the calculation is starting to change there, and my sense from listening to sovereign wealth fund officials is that they want to spread those investments out not move away from US and European investments, so to speak, or to, pull their money out of these markets, but start to spread some of the investment capital out a little bit more evenly. So I suspect that we're not going to see a massive outflow of Gulf sovereign wealth from traditional markets in the US and in Europe. That will still be there. It will be an important segment of the portfolio. But where the increase is going to come in is probably more on the emerging market side of things. And within that, specifically Asian markets. So looking seriously at India and China, which these sovereign wealth fund officials have been doing for some time. Usually they've waded into these markets with partners and with venture capital firms and the like. But some of them, the more professional, the professionalized outfits, they're starting to have their own in-house, VC capabilities and capacities to actually tap into these markets directly. And they're opening up regional offices all around the world. And I think to zoom back out to the broader international political economy portfolio, that's a smart move because there are risks around every corner these days, it seems. And you need to have people really on the ground to be monitoring developments and seeing where trends are going, to have a good sense of where risks and vulnerabilities lie and how that could impact your investments. I think after the Russian invasion of Ukraine, there was a lot of concern about investors all over the world, not just in the Middle East region, but investors all over the world are very concerned about their exposure to assets. So these are the types of concerns that really pop up on the radar when we move beyond the region and start thinking about the kind of global economic dynamics.
I would like, following your remarks, to draw upon two elements that you just shared. First one will deal precisely with the political economy, and the second one deals with the GCC countries as well. How do you think it should be best addressed, the different, we call it here at the Center for the Study of the Global Economic Future, irrational reservations and sentiments towards sovereign wealth funds as a cross-border investment portfolio strategies, to the point even in sometimes that they are called national security threats. So what do you think is really the role on this political economy and competition between countries on assessing irrational reservations against these investment vehicles?
Yeah, I hear, I speak to a lot of folks, people who are very well versed in international political economy dynamics, very well versed on the Middle East, and plenty of people who are not very well versed, but have political considerations. They work in politically oriented roles here in Washington or in Europe. And a big question is always, what are the political objectives behind these sovereign wealth fund investments? And, I do push back against that a bit and like to say, look, I mean, if you really want to try to tease out some political objectives or overarching political goals here, I mean, you could probably try to do that and maybe convince yourself of it. But as far as I can see from the majority of investments that I track of Gulf sovereign wealth funds, the primary concern is making a return on investment. These are, the primary objective is economic in nature. Now, I am a political economist, so by the very nature of that, I recognize there are inherent links between politics and economics. But if I had to come down on one side based on following these trends, for book projects, for journal articles, writing research reports, and I follow sovereign wealth funds very closely at my institute as part of the political economy research portfolio that I oversee. I really would stress that, to my mind, and based on most of the information I get, primary objectives behind sovereign wealth fund, investments and how and where capital is deployed is economic in nature. Now, that doesn't mean every investment is a good one. And I think sometimes in hindsight, these investments, you could say, oh, these investments look highly politicized. But the reality is a number, like I said, even in something like the Russian invasion of Ukraine and other investments in countries where there might be a risk of sanctions, whether they're imposed by the Treasury in the US or European sanctions. a lot of times, I mean, these are just dynamics that investors have to adapt to. And you can't necessarily, I mean, you have to take into account, okay, what happened when a particular development happened? Did we see sovereign wealth funds continuing to rush into, a questionable investment environment? Usually not. I mean, usually when a big development happens and there's a lot of uncertainty, you see investors being, I mean, it's their money at the end of the day. They're trying to be smart with their money. They don't want to put it at undue risk and expose themselves to whatever it is, sanctions or a highly uncertain environment. So, when we think about the kind of accusation that these sovereign wealth funds can create national security threats, I think that the likelihood of that happening in instances where sovereign wealth funds sovereign wealth fund investments actually pose national security threats. Well, it's certainly a matter of perspective, but I think that the instances of that actually materializing are very few and far between. And I would be hard pressed to find an example of that that I think would be clear and compelling. That would be a clear and compelling national security threat.
Different type of tectonic plates that have moved all over the global economic landscape. Even most recent estimations, forecasts of the International Monetary Fund put out there countries like Russia with expectations of economic growth for the year 2022-2023. Most recently, there is a discussion about the BRICS, with the possible emergence of BRICS. How will this new economic bloc affect the sovereign wealth fund strategies?
I think that the blocks are a segment, a kind of global economic segment through which sovereign wealth investors, can think about the world in different ways, and they can use as a lens to think about investments. But as far as I'm concerned, these types of blocks don't actually come with a investment mechanism to be utilized, so to speak. So it's more of I'd say the value that the BRICS bring to, a senior official in a sovereign wealth fund in the Middle East is more conceptual than actually functional and strategic. Because at the end of the day, a lot of these investments, sovereign wealth fund investments, I mean, a lot of them aren't even taking place on a national level, so to speak. I mean, they're investing at that meso level. They're investing in particular firms or their, particular asset classes. They're not. I mean, the country is of course important. The destination of these investments, that's going to impact the investment environment that might be influenced by by strong elite level ties. All of that. So all of those considerations are definitely there, but yeah, like I said, I don't see mechanisms actually encouraging, Gulf sovereign wealth funds or Middle East sovereign wealth funds investing in, in these major economies. But that's not to say that the investments aren't happening, and that's why I think it's more something we need to think about on a conceptual level, and it's really. It's the idea that there are other investments, opportunities, and destinations beyond the traditional ones, like we talked about earlier in our conversation, beyond the traditional assets in in the West, so to speak, or in the US and in Europe. There are other countries that are major economies that are looking at, over the long run, very high growth rates, large populations. These are places that for investors willing to tolerate some level of risk, they could come with a big payout. So Brazil, Russia, India, China, South Africa, these of course, these countries are not going to go away anytime soon as major investment destinations. I think with the one exception, in that grouping at the moment being, of course, being Russia, given the kind of all of the controversy around the invasion. This certainly takes some wind out of the sails as an investment destination. It's going to create a lot of concerns. But I mean, I think the broader idea that there are these emerging economies is one that is very attractive to officials in the region and also kind of sovereign wealth fund officials.